Hey, William. And going live on TikTok now. All right, get in there, Elliot. I'm going to try to ignore it mostly because you know the latest videos I have are a little bit controversial. I'm going to kind of not even be looking at TikTok comments so I can stay focused. All right. Hello, William. All right. All right. We got everybody coming into the TikTok, into everything here. All right. There's Griffin. Hey, Griffin, thanks for the comment on that other TikTok video. I don't know what that guy was on about. Everybody's trying to figure out what's going on. It's kind of clear as day. And they're trying to use like the old formula. Try to say, oh, I think I know what's going on. But that doesn't add up. Yeah. You'll have a lot of people are just, they think they want to know that they understand how things work. And when that fabric changes, they freak out. And it's usually because they're 16 years old. All right, so I've sent out the invites. All right, so let's take a look at the SPY here. Looks like I need to zoom out just a little bit on the TikTok so you can see the full SPY spectrum there. There we go. All right. So today continues to be a downtrend candle in SPY. And just because it went up, it doesn't necessarily mean that we're in an uptrend yet. I'd love to see it be in an uptrend, but I don't think that's going to happen until there's enough rotation. So if you look at it right here and just count the lower lows and the higher lows, you can see that every time the market was unable to get over previous lower highs. And when it does, that'll be a sign of a reversal. So that'll be great unless it just pulls back and then puts in even a lower low. Right now, the market is at 383 in after hours. So right about here. So it's a little bit up in after hours. So that is good. But now remember that the S&P is comprised mostly of like Apple, Microsoft, Google, Facebook, and Tesla, and all those kinds of stocks. And so those are the ones that are still highly levered and in debt. And as I've been saying, when we've got the interest rates rising on us, those are the companies that are going to be reevaluated for their future value, their current present value, based on their future value, discounted back. And I do believe that we're going to see downgrades coming based on those calculations in the next 3 to 12 months. So you may have moments where the market starts to get bullish again, starts to get carried away, and then it just gets dialed back as various companies report and give guidance, and analysts downgrade. Now, that's not going to be across the board. That's just going to be with some of the higher octane growth companies. They're just going to have to turn into value companies over the next few years. So this is a slow change. You may see the market break and rally further, and especially with stimulus checks coming. Once those stimulus checks start hitting, we are going to see small caps just explode again. I think it was just 3 weeks ago, we had 20 like spikers in one day. So I'm very much looking forward to those days coming up in the next few weeks and months, and to see how those dollars get all stretched out and put into these stocks and keep them bouncing around. But certainly what I did notice is that when the market is sideways or positively biased on the day, we do get more spikers, and we do get more small cap pops from penny stocks, et cetera, on up. So then that's really where the day trades are at, as well as, well, right now, because there's not a lot of companies reporting anything extraordinary in their earnings. In the big cap world, the big cap world is under a little bit of duress right now. So that's what this whole rotation is about. And so anyway, what we have is an inability to break recent highs. And if I can get this chart to switch fast enough over to, let's say a 1 hour chart, let's take a look at that. So we'll take a look at the market on a 1 hour chart. You can get a better sense of this downtrend and how it's been having a hard time getting over previous highs. So now maybe you can clearly see it. Just can't do it every single time. Since the top at 395. And on top of that, it just keeps putting in lower lows. We're just getting dragged down further and further. So, you know, if we can get up over, let's say, this set of previous highs, and that would be in the 389.5 to 391 region, 391 being the top. If we can get up and over that, then, you know, we may see the market start pushing again. But it could, again, get dragged back and rotated around. So even then, it wouldn't be with a lot of conviction. However, I do believe that even if it does get up there, it's only going to be by coincidence, and it's going to come back down. We're not really done fully rotating out of all the stocks, and it's days like today where they go up that make them great to get out of, and so you can put your money into the smarter plays. So, you know, market going up is good for the rotation as well, and could cause further drop. The S&P is still weighted improperly, and all these market caps are adjusting in size, and so you're going to see those change on the S&P weightings, and even some of these companies popping out of the S&P and being replaced. Yeah, well, actually, well, healthcare maybe dropping, but overall it's doing okay month to date, and financials, yeah, for sure. But like insurance, including health insurance, but like MetLife and Aflac and a United Health, they're just doing outstanding. And industrials doing great, because that's what the rotation is going to be all about. It's preparing for inflation. You know, and inflation, by the way, is going to be in waves. So it will pull back, and then the market will push for, you know, a quarter or a month. But in general, you know, this rotation is happening because in the long run, it's the best bet. It's the best guess. If it goes the other way and inflation is off, fantastic. But it doesn't look like that. And the rates just keep rising and keep rising. And today was no different. So let's take a look at the VIX and see where we are with that. The VIX was at 32 in previous sessions, and then 30, and today got all the way down to 24, which is nice, but still I'd like to see it press down harder and start to get its lower highs down into below 25. I don't think it's really going to do that with the S&P doing what it's doing. However, if you could just measure the volatility of not the entire market, but if you could measure the volatility of the sectors, I think you'd find that financials, like banks, are in a nirvana zone. You could take swing trades on them. They're very healthy. They're doing great. They're in a bull market. Like, let's take a look at XLF. See, it's just doing outstanding. That's on the hourly. And then we'll move out to the daily so you can kind of make sense of that more. All right, that's a bull market in financials. And then how about tech? looking pretty hairy, in the QQQ. Pretty hairy right now. We've seen a drop like that before. I do believe that what's going on now with interest rates is now just going to cause that kind of a W right there in tech and probably continue to make it go sideways for a long time as analysts do their downgrades on tech. But like, let's take a look at energy. Recently it's on a bullish run, and that makes sense as commodities are inflating. And XLV healthcare, generally in an uptrend. And industrials are where it's at. So like Caterpillar, GE, and Deere. So let's take a look at Deere. Look at that chart on Deere. Woo-wee. And Caterpillar on fire. Now GE has only recently started to come out, and it's looking absolutely outstanding. It's even hard to find a spot for a pullback to get in, so you got to average into these. All right, so let's take a look at, last week we got into GME because I saw the squeeze coming. And we got in around 115, 120. And look at the bottom here, the bottom indicator. That's the squeeze indicator. I don't use the squeeze indicator much, but it's just nice to see that it confirms what I was seeing. And this is when I alerted that it is time to get in GME, because I was seeing this wedge forming. And I'll draw it here, but I'll also draw it on a bit of a closer view. But you had this squeeze going on to the upside. That's where it was previously. And so you expect it, therefore, to have a bit of a pop. We already know that GME has that squeeze potential, and that it can do that. So now if we look at what happened right after that, you can see that was pretty on point. That was on March 3rd, 5 days ago, and that's when we piled into GME. Next day, it popped up to 150. Next day, 155 as a high, and then today, we hit 210. Overnight, right now, it's hanging out around 195 average. Now, if we take a look at that a little bit more zoomed in, let's say the 1 hour, 20 day, we nailed our price targets today. 180, 190, and 200. That was my price targets. I didn't expect more. We did get a little more at 210, so that was nice. But all I promised was that we would get 180, 190, and 200, and that's what we got. So I absolutely nailed that one. And that was based on prior resistance and getting over those pivot highs right there. Let's see if I can make the line big enough. Okay. So this is why 200 was a key point, is because it was needing to get over that. And then 180 was this 2 days worth of price action previously. And then 190 right in between there. So we nailed those three. And then I said, hey, maybe it'll go to 250. That was based on prior resistance. Right, Faraz says, but now it's unhinged, so we don't know where it's going. It's a little bit uncertain. You wouldn't want to subject your money to that overnight. All you got to do is trade it all the way up to the close of after hours and then take your money back. And then tomorrow morning, wake up at 4 a.m. and if you want to get back in, get back in. But don't subject your money to that overnight hold when these stocks go bonkers like that. They become wild, untamed, unhinged. So anyway, the squeeze was this. I mean, you can clearly see it. We're coming to a point on a bullish bias. And I think what it was, I called it the night before. I said, everybody, let's get in right here at 120. And some of us got in 115, get that cost average low. And within, I think it was 30 minutes, it started popping. And everyone was like, should I sell? Should I sell? Some people sold, and that's perfectly okay. But if you got in where we got in, we were in it for this. And that's what we got today for massive profits, between 70 and 90% profits. Yeah, oh man, good idea for us. There you go. Now today, after we completed that trade, we were all out and we're just happy campers. Like I said, if you had any remaining day trades left, or if you have no day trade limitations, then if the price were to break the high again, to go ahead and get back in. It did not, but what it did do, and let me show you, is put in a perfect ABCD pattern. So hopefully that thing doesn't move on me. You know that thing always moving on me. Those of you in class. So you have this climb to A, the recession to B, and then getting back over to C, over VWAP. So that's basically textbook ABCD pattern. I'll label those for you guys who are new, so you can see where those are. A, B, C. What happened there? And then D is all about breaking through A, going into the stratosphere. So you just have to use either Fibonacci extensions or prior resistance points to figure those D out points. And then you can just scale out and just, keep leaving shares on the table. And by the way, when you play stocks that are already volatility exploded, like GME was today, you don't play options. You play stock shares, and we played stock shares on it because the moves are already priced in. So anyway, we got into GME at C there, and then on that pullback, so between 180, I alerted the CB entrance there. So we started to get in around 180. I think some of us got in at 185, some people at 188. And then when it popped, of course, everyone was like, oh no, why didn't somebody tell me? Well, yeah, too late, man. You got to follow with us. And our price targets were 200 and 210. And I believe we got that first price target. Yeah. And so we'll see tomorrow if it continues, but we did get that all the way from 180 all the way up to 202 in after hours. Already had that preset, how much to sell, when to get out, the whole thing. So our group did quite well. And by the way, if you want to join, just click the link in my bio to come into our Discord, and we'd love to have you. Big money, new days before the news. So C is the trigger to buy. No, this is technically the way the strategy works is C is the trigger to double down. What you want to be doing is getting your position, creating your position up to a 50% amount between B and C at the lowest points possible. So you can, but then when it starts to get close to C again on the third tap, it may break. So it might be too late. So you have to sort of rush to get your 50% position on. But if you only have 15% of your position on and you have a good cost average though, down at like 180, that's the whole idea, is to get it down there as low as possible. And every time you see it dipping, just grab a little more. Then you just top off to your 100% position size on the break of C. And then you take profits halfway between C and A, 25% out, and just beneath A, 25% out. And then your D targets, you leave for 10% out on the pullbacks of rallies. Pulls back of rallies, pullbacks of rallies. What else did we hit up today? It was an amazing day today. Fantastic. We also got SPY puts, and we still have Tesla puts on. So we took the breakdown right here and held, expecting the market to drop further, because that's not positive. That's a very bad drop. And we did really well on those puts. And then with Tesla, also same thing. But Tesla, we've been in puts for a couple days now. So we're looking for about 500 on Tesla. Cool. Also, let me take a look. We also traded eyes, really wonderful play at the opening of the market. So we had all kinds of trades today. We got SPY puts that were held for hours. We had Tesla, which is a multi-day put play. And we had GME, which was a multi-day swing squeeze play, and then turned into a day trade ABCD pattern that we took profits on in after hours. And then at the beginning of the day, we were watching small cap poppers for anything that would break out. And we got in eyes immediately upon the breakout at 967 and rode that all the way to 1483. For some people had 40% gains. So yeah, we'll be doing more of that tomorrow morning and every morning. We'll be all over the small caps for those pops, and then sometimes we'll have a big cap that has some good news, and it's gone from like Etsy or something has gone from whatever it's at up 100 points, and we'll do a dip buy trade with options, and we can sometimes be in that for 10 to 45 minutes, and when they really work out, you can get about 10 grand to 40 grand out of just 10 or 20 calls. Pretty incredible when those happen. And those happen about once every 3 weeks. We get one of those huge grand slams. I can't join the Discord. How can I join the Zoom? You can go over to my YouTube. So you can click on the YouTube link in my bio on the TikTok, enter the YouTube, and I'm literally typing right now the link to the Discord. So that's how you, to the Zoom as what I'm going to say. So you can come and join the Zoom from there. Here we go. So Samuel Salinas asks, SC has been on a downtrend and just hit a new low. When do you think is a good time to put in a juicy call for it? Yeah, when I start to see semiconductors turn around. So I don't really think that the SC is looking too good. Anything in that sector right now is looking too good. Let's take a look at SC now. So that's the sign of a downtrend, lower lows and lower highs. And you have to go with that until anything changes. So if SC were to do something like this, come back up and over this high, then I might be interested again. If it did that, and then it could come down and put in a low along the bottom end of this channel, now I might be interested in getting in. So that's a ways away. Month and a half away. You bet, Zapata, no problem. Oh, I watched your options YouTube video, which was great. Mention that to the TikTok people. All right, man. Dylan from our group says to go over to my YouTube and watch some of the options videos I have on YouTube. So, there's lots of videos from many different people teaching about everything about the stock market all over YouTube. But some people like the way I teach. I like to break things down super simple. And in fact, today was in a private lesson and said that when you never know when something's going to break out, when it's in a wedge flat top wedge formation, right? And it's going up, first tap, up, second tap, up, third tap, and then it breaks out. That is usually the typical pattern, but you never know if it's not going to break out here, or break out a little and then fake out and come back down like that. And so I said, it's like in poker, right when you get to this point, you know, you want to see the flop. So you got to pay a little. So you got to get in your normal position, see the flop, see how it turns out. If it starts to pull back on you, get all out, wait for the next one. Try again, wait for the next one. And you just got to keep doing that until you finally land, you know, trips, something like that. Let's see, when you were talking about Deere and Caterpillar, do you mean stock holding? Either way, man. You can get like a long, what's called a leaps. So those are options that are long term, like 1 to 2 years, 6 months, 1 year, 2 years. But I recommend you always get, if you're going to go long term on anything, always get more than a year's commitment. That way you can avoid short term capital gains. So it's like, you know, you might be around 11 months and then the thing expires and it sells, and then, you know, now what do you got to do? You got to sell, you're going to have to pay 30% taxes on those gains. So, but if you could hold it just another month or two, then you can take 10% taxes on that. And that 20% difference can be so huge that even if the stock were to go down, it's still more profitable to hold it into the 12th and 13th month. So if you're going to get long-term options on anything like Deere and GE and the industrials, the banks, and the aerospace going, any of these, I do recommend it. It looks like to be the play of the year, the play of the decade, and you're putting some seeds in there, but get the longer term contracts. And you can also sell options against those weekly. You can sell against your long-term options weekly. We'll take some classes with me, or you know, some studying of how to do that. But yes, you can actually make a lot of income. By the time you get to the end of the term, you've already made your money back selling weekly options. All right, so let me see here. We got some questions from the group. Matthew says, all tech stocks have a similar look to them. When would you think they are safe to get back in for a swing? Most have 46% upside from here. That's assuming they're going to go up 40 to 60%. Man, you've got a lot of built-in presumption there. I think that you know, you need to probably watch some of my more recent videos, like the ones from last week about this rotation that's going on. That's really not where the money is anymore. You know, if you want good swing trades, good juicy swing trades with a lot of push and a lot of momentum, that's Caterpillar, Deere, GE, the industrials, the banks, UNH, Met, insurance, you know, every company that's going to do well in inflationary times. Caterpillar, for instance, we put on last week, we're up 103% on that swing trade already in just 2 days. And Deere up 73% in just 2 days. You're not going to really get that from that kind of, you're not going to be able to get into any trades on Apple, for instance, like that. And you haven't been for the last 6 months. It's been nearly impossible to get anything but sideways out of Apple. And Apple's a darling. Apple's one of the best, you know, but like most every other stock is going sideways up there. So yeah, it's a real sea change right now, and you need to wrap your mind around that. Those particular stocks are not going to go up so easily anymore, and they're going to be under a lot of pressure with analyst downgrades. I will say this, that in inflationary times, those companies that don't have any debt will do the best, especially those tech companies, those big growth tech companies. And guess what? There are at least 2 of the big ones that don't have hardly any debt, Facebook and Google. Those could be your bets right there. You can get leaps on Facebook and Google for the next year. And I think they may not struggle and have any of the downgrades, because like Apple is 32% in debt. Tesla is 27% in debt. Netflix is 41% in debt. Those companies are going to have huge crushing payments coming in on all their debt needs in the coming years. And the analysts are going to know that, and they're going to backward project that from their future valuation. And then they discount that back to current present value. And then, you're going to see, Tesla be like 450 or less, maybe, across the board from a lot of analysts. And you're going to go, what? This company's worth way more. Yeah, it's not about that. It's about their debt payments. So they fucked up. They have a lot of debt. And companies like Facebook with 7% debt are going to crush them moving forward in an inflationary environment. Facebook could buy Tesla in the coming years because of that. That's how much of an advantage it is not to have that much debt on your books. And that might not be a bad idea. Maybe Elon Musk will move to Mars and be working on some other projects. All right, next question. Consumer staples, yes. Any recommendations in consumer staples, he said. Maybe Walgreens, because I don't like how Walmart and Target also mix in luxury goods and stuff that's not. It's consumer discretionary, TVs, projectors, all these, lots of stuff that people, they're not basic needs. So but maybe Walgreens is that's like a basic needs corner, drugstore. So, but I, have to take a look at the charts. So let's take a look at it. So I'm not too happy with that chart. For example, there were banks that I liked and banks that I didn't like. And we kept the ones that I did like. I'm trying to think which ones I'm talking about here. We have a huge list: GE, CAT, Bank of America, Wells Fargo, JP Morgan, Lending Pro, Rocket, under 30, obviously, Redfin, Zillow, ExxonMobil, MRO, Citibank, AXP, SYF, MasterCard, Visa, PayPal, DFS, Elevate Lending, OMF, BlackRock, OCSL, LC, Square, SI. So we're still building that list. And, we'll have more recommendations in the future for our members. All right, so, but now it's unhinged, so we don't know where it's going. What's a good buy-in on GE for long-term swing? I mean, damn it, I would love to get into GE, but it's really hard. It is really way up there. I would like to buy it somewhere in the 13 range, or maybe 12.7. Right now, it's really just hitting the top. And it may even kind of shift gears like that and move into a whole new channel that's way above there. And we'll have missed from 14 to 16, for example, and move there. And GE call options are pretty cheap, although they're getting more and more expensive by the day as GE starts to take off. So I really don't know what price you should get in at. I would love to see GE have a little bit of a pullback. It looks like it's following the 8 MA. And so anytime you can get it along the 8 MA on the daily, probably would be a good buy. Okay. And then somebody on the phone says, oh, damn, I thought we were buying back into GME to hold overnight. Looks like you're going to be okay. I think tomorrow it's going to try and test the 200s again. But that's just a guess. I mean, you can never be certain. How do you feel about plays like Disney, which is a growth play with a fresh business model in streaming? They've been in a huge uptrend minus the COVID crash. Yeah, typically entertainment stocks do well in times like this. Entertainment is almost like a consumer staple, a basic need, like drugs and alcohol and guns and weed, and toilet paper. Like, people need these things when they're feeling depressed and pushed down by society. And entertainment is one way to kind of, hit themselves up with that fix and take their mind off things and relax and kind of deplug from The Craziness of Life for not too much, for like $15 a month. So yeah, entertainment, music, all that stuff that makes people feel good. That's probably going to do well, and it's not going to get crushed too hard, because you kind of got to treat it like a consumer staple. It's kind of like life. I mean, people love entertainment. Pretty hard to get out of. Mostly that's because people don't understand life. So they're trying to look for entertainment, and in entertainment and in songs and all kind of stuff for lessons of life. You know, that's what was the protege of Freud? It escapes me right now, but that's what the protege of Freud said. I can't remember the Jung. Carl Jung said that basically all humans are curious about death. And so when you watch entertainment, you're really trying to get some lessons about life, you know, so how you can avoid death, basically. All songs and all entertainment and all narrative media is about avoiding death and giving you lessons of life and how you can enjoy your life better, so you won't feel so bad when you die. Sorry to be so gloom and doom today, but all right, I'm new to trading, and I do nothing but buy high and sell low. So I have that down really well. What is your advice on someone starting out? What is the best move to make? Is there moves that are so obvious that even someone new like myself can make some money on, or better to just wait on the sidelines for a good amount of time before I try and do any more trading? Swing trading, that's it. That's what you should do, swing trading, which means to be in a position for more than the day. It means like overnight or more, but typically it's a couple weeks long. And I don't know how much money you have, but you know, you want to have, you know, $1,500, $2,500 to start with, something like that. You can do something with $500, but you got to wait for that cheap option. GE options are pretty cheap. You might be able to get some good duration on GE and turn $500 into $1,000 over 2 months, maybe even faster. So glad I sold my Apple a few weeks ago. Good job, Dylan. And why did you sell your Apple a few weeks ago? I've been watching Mark Douglas video, and he says that the market is probably game. Would you agree? I'm not sure what your, market is probability game. Would you agree? Probably, I'm not sure what you're saying, Sergio. Keldon from YouTube says, would you say SPY would be good to go long into after 2 to 3 months once the reshuffle of S&P 500 stocks starts taking place with tech stocks getting downgraded? Yeah, I mean, that's the beauty of SPY. SPY will always be bullish. SPY will always be a place where you can sink your money, because it'll rotate right out of whatever's not working and right into what is working, and then start to lift again. But that rotation can take 3 to 12 months, even longer, maybe even 2 years. So, you know, that kind of play is best suited for your savings portfolio. The oil and gas sector, great. Hey, Dallas. Dallas Crane, everybody on TikTok. Go follow him. Very cool friend of mine. Self-illumination, young. Yes. Where do we got here? March Douglas. Tesla was overvalued already too. Well, yeah. Especially if you count in inflation. How do you feel about plays like Disney, which is a growth play? Bitcoin is running. Can we look at it? I bought calls on SOS Long. So Bitcoin, let's see. Currently at 54,000. Really? I don't know if these prices are incorrect. They might be adjusted on the futures contracts, but it's probably more like 52,000. If anybody can get me the correct BTC US dollar price, let me see. I'll pull it up on another system. 53,700. Wow. Good job, Bitcoin. So the question was, can we go over the chart for Bitcoin? So Bitcoin looks good. It held the 20. See this yellow line? That's the 20 moving average. It pulled back and bounced off the 20. And you kind of got to go with that. Last time it pulled back and bounced off the 20, it just ripped right on past the previous high. Maybe it's going to do that again. If so, you're looking at something like, let's draw it out. $75,000 by the end of this month. That's if it does what I just drew. So, you know, it could definitely encounter problems breaking through certain areas, and that could take a lot longer. But potentially 75,000 looks like the next kind of price target before, you know, any kind of major pullback. But you know, you probably would be too short term on your SOS. Oh no, you're not. Okay, good. You're until January. Good. 90 delta. Wow, Kelly, look at you. You are just the king of options now. I love that. Man, making the good decisions. I mean, at 90 delta, are you sure you weren't just okay just buying the raw stock? But I guess you probably saved some money. 53,280. All right, thank you, Brian. Still moving forward. Right there with you, and convinced if I buy puts, the market will go up. Can we go over the chart for Redfin? It looks like they had a major dip. Yeah, Redfin is on our buy list as well. So let's take a look at it though. Yeah, that is a major dip. I still like it, you know, and it could be a small part of your real estate play or your slash, you know, mortgage lenders play. But in general, I don't like stocks that are this unforgiving. You know, I'd like to see something more like, we used to say Crocs, but probably I could say Caterpillar. Caterpillar is the new Crocs. There you go, guys. Caterpillar is the new Crocs. So go for something like, you know, company like in the industrial right now, maybe, or perhaps Zillow looks better, or you know, maybe Rocket will do well from here. And the banks are doing outstanding. Bank of America, nice chart. Wells Fargo, pretty good chart. But yeah, look at those industrials, just outstanding. I'm on a call for AT&T the end of this week. How do you see the play, if I may ask? So telecom seems to be doing all right, I believe, last time I looked. But you know, I've been telling everybody for a long time that AT&T is not only going sideways, but they're going down. Yeah, you have these, you know, more than one standard deviation moves that happen out here, but those are outliers. And then sometimes you get that three standard deviations out. And those are outliers. In general, though, the stock is on the decline. And right now is probably at its peak. You know, if you look there, I mean, is it going to do one of these again? Maybe. But if it doesn't, you know, I think the more reliable professional trade would have been to sell today at the top of that channel, because it's probably going to come back down to the other end of the channel now. Guns and weed. That's right. Can we pick your brain on what you think of Buzz? Yeah, I already talked about it. I already analyzed it. It could grow into something worthwhile, but look, the problem I have with it, and it's doing about 60% a year, because by the way, Buzz is not new. It's Buzz TR. It's a previous ticker you could get into. But Buzz is the ETF that now represents Buzz TR, which is supposedly an AI type of balanced ETF. And it starts to buy into and rebalance itself into what's most popular on social, being talked about on social. However, upon analysis, I found that it only starts getting into those like after 1, 2, or 3 months. So it's very laggy. And that's what I really don't like about it a lot. Like I would buy right into something that just started to rebalance and reposition itself right into whatever's going on social media, maybe on a 3-day rolling basis or a 1 week or 2 week rolling basis. I'd be a much happier about that. Maybe a 1 month rolling basis, like for those small caps that are just building up and waiting to break out. But 3 months of lag, that's too much, man. So yeah, kind of thumbs down on Buzz. I don't think it's the Messiah or the Holy Grail ETF that you probably think it is. If you really get into the guts of it and trying to understand it. Oh, here's who popped Tesla today a little bit before it fell. And then what was the other one? NVTA, Kathy Wood. Burl, UMC, William, you know the drill. If you want me to take a look at something, try to accompany it with a thesis of why we're taking a look at it. What platform am I looking, Sean, at? This is Thinkorswim, but I have a more detailed, I have multiple windows up here, and this is just for the presentation right now. Thinkorswim, the way I've got it set up, is more elaborate, and you can see that in my day trading videos, all right, on the YouTube channel. Dylan says, I saw the downturn. My gut told me that it was going to keep dropping. It was just tying up money that I could use to grow my egg. Dude, why can't everybody think like that? Basically, you're not a trader if all you do is hold on. You're not a trader. So you're an investor and you're like keyed into fundamentals. Dude, if your stock breaks pivot low, get out. That's it, period. That's it. I need to get like a, like some kind of a, nameplate back there, a quote plate. If it breaks pivot low, get out. If it breaks pivot, get out. That's it. That's the key. That's the holy grail to trading right there. If it breaks pivot, either get in or get out, essentially. I cannot put it in my mind that most of the trades you will learn are like 90% winners. Thank you, Sergio. Yeah. God, it took a long time to get there, though. I'll tell you that. You got to know what's the right texture. And there are huge winners out there. People make 300% a day, 500% a day. But I'm just not interested in that because in the long term, those kinds of plays, a lot of them do not win frequently. As you can see, the trades that I alert the group are all pretty high quality trades. I really try to keep us out of anything bad. And there's been a period where a week and a half has gone by and we haven't had one swing trade. Everyone's so hungry for a swing trade. Come on, please, please. And I'm like, look, that's just because there really is not anything good right now. And then now, the time to make money, we've got lots of swing trades going on now because the market isn't actually going down. It's a rotation. It's not going down. The heavily weighted things that got over bubbled are going down, but banks are going up. Caterpillar's going through the roof. Deere's going through the roof. Industrial's going through the roof. Aerospace, banks, insurance, energy, commodities, healthcare. So, and consumer stayed ground, but they're doing well in the last month. I always forget that Evans reads every single chat, so excuse me for the multiple questions on the same stock. Faraz, I don't even know which stock you're asking about. Teladoc. Ryan with the tip on Teladoc. Let's just take a look at it. Man, that looks very bad. So good luck with that, Ryan. But it should do well. But just because a company's in the right sector, has the right product or service, and kind of aligns with thesis, doesn't make it a good fucking business. Right? So something's gone wrong with Teladoc. They don't have the right staff. They don't have the right leadership. They don't have the right management. They don't have the right business plan. They haven't figured out their customers. Something's not right with Teladoc to create a chart like that. But we go over to Caterpillar, CAT, and you can see that those people have figured out their customers. They figured out their business. They figured out their supply chains. They've got good leadership. They've got great staff. I mean, just look at that chart. That's going to be 1,000 in 2 years. That's Caterpillar's like the new Tesla. You guys got to get your head off of Tesla because, you know, we're going into an inflationary period, and Caterpillar is where it's at. Crazy, but true. Yes, tractors. Yes, because people need basic stuff now. What about cable companies like Spectrum and Charter? I don't know, too much competition probably. Griffin says screw buzz. He didn't use that word. He used an F word that I reserve only for when I say it with good meaning. If anyone is thinking about buzz, save yourself some time. Yeah, Ryan looks like he hasn't been following our classes. He just recommended the ARCs. Like this is where everyone here now laughs like hyenas at Ryan. This is Ryan's big embarrassing moment. Ryan just recommended the ARCs. The ARCs are like pretty heavily weighted into kind of the old guard and heavy debt. And I guess Cathie Wood just didn't think that was a problem. And her analysts who probably told her that that could be a problem, she probably asked them, you know, okay, what is the probability that that's really going to be a problem? And maybe they said 30, 40%. She said, okay, for now, it's not a problem. And then, but the thing is that percent's going to go up fast. In about 1.5 years, it'll be around 90%. So yeah, ARCs are in trouble. The market's in trouble as long as it continues to be weighted towards those kinds of stocks that are like high octane growth companies. Cat and Deere have known their customer base for 50 years. Yeah, not to mention, I do believe that they are starting to adopt, just like GE, the lean startup model. And so that's going to increase their output and diminish their costs. So Cat's like, great bet. You're just going to hear Cat, Deere from me for probably weeks now. So you could probably get in now. As a matter of fact, Deere is probably a good buy right now. Today was a candle that broke over the previous candle's high and is a decent buy. What about copper? 100% absolutely, yeah. All the commodities, but especially ones that go into supply chain for electronics, of course, absolutely. Mostly for chips and for artificial intelligence, because those kinds of things are going to serve our basic needs very well. Any innovation, any very innovative lean companies that are mostly cash and not debt heavy, that are in the innovative sides of any of these sectors, any sector, any innovative company can do well. It's right now the big bloated ones with a lot of debt that are going to just be up against a big problem. I mean, because like, you know, in order to make a profit, you know, they'll become unprofitable because the debt payments they're going to have to start to pay, and they're going to become unprofitable. So what are they going to do? They're going to have to cut some R&D back. They're going to have to cut some staff back. What's that going to do? It's going to make them less innovative. You know, if these companies, these growth companies, don't turn into innovative value companies and instead try to become safe value companies, they're going to lose. So like making the right decisions right now is going to be very important. And you can see that Cathie Wood already is not. So not everybody up high has all the best advice going on right now. And these companies could be in peril more than you would think. But I don't really think that about Tesla and Apple, by the way. I think they'll go sideways, if not just slightly up over the years, but nothing like you've seen. Like that's over. That's over. That's not going to be valued in like that anymore. You know, Tim Cook really screwed that up. Apple had no debt, zero debt. That was Steve Jobs' like goal, was never to ever go in debt. It never had debt. The day that Steve Jobs died, they started going into debt, and they're now at 31% debt. Hopefully those tech companies don't have a Kodak moment. Well, yeah, funny, but also a Kodak moment might be just what they need to get all out at a profit they hadn't seen for years. The marijuana sector may be hurting But from what I understand, that is still a good sector. And, what about solar and, the EV? But they're all getting beaten down. And I don't quite understand that thesis yet. All I could think about is that perhaps those are just too high cost luxury products. And it could be that people don't have the ability to front that money in an inflationary environment uh, without a loan. And that loan, they realize, at rising rates, they can't afford moving forward. And so the outlook on those companies becomes bleak. But how does that affect marijuana? Sergio says, weed is kind of expensive. Oh, Adam was talking about when Kodak decided not to go digital, or we could say when Blockbuster decided not to go digital, or when Toys R Us decided not to, go digital. I mean, there's no end to these blunders, historical blunders, and frankly, I think Netflix is going to be one of them. Pretty odd because that's the one that overtook Blockbuster, but Netflix is really heavily in debt right now. And what are they if they're not a production company anymore? Because they're basically they're not going to have that kind of money to generate those revenues anymore moving forward. And they didn't really secure all those partnerships. And look what happened. It got splintered. And now we have Disney Plus, and we have Walmart Plus, and we have, all these different Hulu Plus, and we have all these different services. Instead, Netflix is not a movie studio. It wasn't supposed to be, but it became a movie studio. Movie studios aren't like supremely profitable. They're not like amazingly profitable. Netflix's move should have been to use investors' money to subsidize contract costs for getting agreements with Universal, with all these different entertainment companies, Disney, and to get all movies should have been in the Netflix store. Now it's like, I don't know, 10% of the movies that exist are in the Netflix store, maybe less. And then you have a ton of Netflix productions. Well, you're just subscribing to Netflix Studios now. And that's not the service that consumers wanted Netflix for. You're supposed to be able to Netflix and chill. Now it's like, your Universal Studios and chilling. It's just stupid. Not the same thing. All right. Anyway, that brings us to 9:00. Don't forget to join the Discord if you're on TikTok right now. Click the link in my bio to either the YouTube or our Discord, and click on the links and get into our Discord and come on into our Discord. Love to see you there. And there's also a lot of different links there in Chart Trader links. And those will have books that I highly recommend, including The Fourth Turning, talking about what's going on now. That book was written in 1997, and it predicted in 2020 that there would be a pandemic and political division to usher in this fourth turning that we're experiencing right now. It was written in 1997, but it wasn't hard to predict because it's an 80-year cycle. And you just graph it. You just graph it down from 1980 to 1997. You can just see it's coming. So the fourth turning. Sergio, you can go into the Chart Trader links in our group and click through to it. So as far as plays for tomorrow, let's take a look if there's anything interesting from the Market Chameleon. So we go to stocks, pre-market trading, and we check what's popping, what popped in after hours, and we still have ANCN and I clicked pre-market. No, that's probably why. After hours. All right, we have 83% pop, and then from there only a 16% pop, and then 11% pop. So we really only have, and then they were on kind of low volume. So we really only have one prospect, Invo. So we'll see what happens in the morning to see if there's more. But let's take a look at Invo real quick on the daily chart to see what we're working with here. Invo Biosciences was at 3, has closed around 6 in after hours. And here's what we're looking at. So that looks pretty good. The key parts that look good are that we have this huge bullish push, followed by not more than a 50% retracement that held until closing of after hours. So this could be pre-market as well. And then from there, another signal was that it was able to break that pre-market high. Was only by a little bit, but it's still a good signal. And then it pulled back less than 50% and stayed above VWAP at the close. So those are really good signs. We will reanalyze it in the morning, and maybe it will do more of this, and that will be great. And VWAP will keep moving up, and we'll be able to take it at $7 or $8 on momentum, and it may push to $12. We'll check out tomorrow a little bit more about that. But all right, that's it. Yes, sir, Brendan, fourth turning. Yeah, that's it for tonight, guys. Thanks very much for tuning into class, and I'll see you in the morning in pre-market game plan, and then we'll be live trading the morning session. And don't forget to click the link in my bio. Thank you, Sergio. You're welcome, Dylan. Keeping you guys on the right side of the traffic, of the freeway, keeping you out of incoming traffic. Let's go make some money again tomorrow. Dude, we made so much money today. Everybody, we did so good today. The market was up. It was down. GME popped. We got back in. I mean, Tesla, puts, eyes, 40%, 25 to 40%, all account value gains. Let's do it again tomorrow. So much drama. See it at 6 o'clock.